If the United States was a company on the New York Stock Exchange traded publicly, it would be what we call a dead company because it doesn't bring in enough income to make its interest payments. Bitcoin is very importantly the only asset that everyone can actually acquire because it's so divisible. You can buy a penny of it because it's free to hold. You don't have to pay property tax on it or anything like that. You can acquire it anywhere in the world. So you don't need to be Miami beachfront real estate or on the coast of California. For all of these reasons, Bitcoin enables everyone to be an asset holder, enables everyone to get long, get paid.
Bitcoin's recent 8% dip since September 29th has provided a buying opportunity for whales who have acquired almost 50,000 Bitcoin worth about $3.15 billion in just 10 days. According to 10x Research, this decrease is a natural correction after Bitcoin reached a high of $66,200 on September 27th. This vote of confidence from key investors emphasizes Bitcoin's durability. In fact, experts such as Jack Mallers believe Bitcoin can play an important role in easing economic uncertainty. Mallers recently addressed the U.S. wealth disparity, warning that politicians' remedies could undermine the economy. He underlined the significant inequality between the top 1% and the poorest 50% of families, underlining Bitcoin's potential as a financial inclusion tool and a global exit door from economic insecurity. According to Jack Mallers, the United States faces significant financial challenges due to its $2 trillion deficit, with $4 trillion in revenue and $6 trillion in spending. Mallers observed that the market is losing faith in the government's capacity to sustain spending without lowering interest rates, making borrowing cheaper and increasing dollar liquidity. This would increase asset prices, favoring the wealthy, particularly the top 1%, who own a third of the country's wealth. In comparison, the bottom 50% earn barely 2% and live paycheck to paycheck. As we bring you clips from Jack Mallers' recent discussion, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks, and enjoy the video.
If the United States was a company on the New York Stock Exchange traded publicly, it would be what we call a dead company because it doesn't bring in enough income to make its interest payments. I think the United States brings in about $4 trillion of tax receipts and growth of their own, and they spend over $6 trillion. So there's around a $2 trillion deficit in spending. And so that's what you call a dead company, is when the company can't actually sustain the cost that it needs to spend. So what the market is saying is, Janet Yellen, we don't believe that you're going to get the deficits down, that $2 trillion number, the $6 trillion number. We actually think you're going to get the rates down, the interest rates, because another way to make the payments affordable is make it cheaper to borrow the dollars, right? And then when you make it cheaper to borrow the dollars, you're obviously going to increase dollar liquidity. You're going to make assets get higher, like the get long, get paid. Bitcoin's going to go up, gold's going to go up, real estate's going to go up, stock market's going to go up. And that's actually going to increase their $4 trillion that they're collecting on us, because the biggest tax receipt that the United States collects is actually on capital gains. So as our assets go higher and we sell these assets to live our lives, obviously the US is making more taxes on us when our houses and our Bitcoins and everything goes up. So that's what the market is saying. The market is saying irresponsibility. The market is losing confidence, but it's not necessarily confidence in the United States and in the US dollar. It's confidence that they can sustain government spending at this level without rates coming down. You got to take a little bit of a step back and appreciate the fact that not everyone has assets. Not everyone can get long, get paid until Bitcoin. So I pulled up in Q4 of 2021, according to Federal Reserve data. So according to the central bank itself, the top 1% of households in America, so the richest 1% in the country, held around a third of the country's wealth. The bottom 50% of the country held around 2% of the country's wealth. So the problem with this, if you have a house, gold, stocks, and Bitcoin, you know, you're right. Jerome's doing a great job. What does he want on his pizza? But over half the country doesn't have any of that. And so you are directly harming hundreds of millions of people with your strategy. Bitcoin is very importantly the only asset that everyone can actually acquire because it's so divisible. You can buy a penny of it because it's free to hold. You don't have to pay property tax on it or anything like that. You can acquire it anywhere in the world. So you don't need to be Miami beachfront real estate or on the coast of California. For all of these reasons, Bitcoin enables everyone to be an asset holder, enables everyone to get long, get paid. When they print dollars and they provide liquidity to further finance the government deficits, yes, that does just juice assets. Bitcoin is going to go really, really high. Gold's going to go really, really high. And he can probably do this, he being Jerome Powell, without destroying confidence in the dollar. There's going to be destroyed confidence in the government and how we spend money, but it's here nor there. Nobody necessarily loves the government anyway. Who is it destroying, though? Because there is no free lunch. Printing money isn't printing growth. It isn't printing value. And the reality, the truth, is it destroys those that are holding the currency. And now over half of our country literally has to hold the currency because they're that poor. Over 50% of the country holds only 2% of the wealth. So these are people that are living paycheck to paycheck. So if you're literally living on the value of the dollar week by week, then your life's going to get exponentially worse over the next few years. And the benefit will be those that actually can afford assets. And again, Bitcoin's very revolutionary in this way, is that everyone in America and the world can now be an asset holder. Everyone can get long, get paid. You can buy a penny worth of Bitcoin. You can hold it without paying any property taxes on it. You can secure it yourself. You can be anywhere in the world.
Jack Mallers cautioned that politicians' attempts to safeguard the 50% of Americans who own only 2% of the wealth could drive away wealthy individuals and firms, worsening the financial situation. Mallers remarked that the U.S. debt-to-GDP ratio is approximately 130%, indicating that the U.S. has too much debt and no growth to repay. He stressed that someone must absorb the loss, but officials have not disclosed who will bear this responsibility. Jack Mallers believes that the poor and regular Americans who live paycheck to paycheck will bear the brunt of the consequences. He sees Bitcoin as a unique possibility for financial inclusion and safety, a global exit door open to anyone. As we explore further into Jack Mallers' discussion, you'll uncover his view of Bitcoin as a promising solution to the widening wealth gap in the United States.
Okay, let's take the opposite approach. Politicians are going to protect the 50% of America that only owns 2% of the wealth and doesn't have any assets. And they're going to treat those that have assets like, and they're going to do unrealized capital gains. They're going to price cap things. They're going to raise minimum wage. They're going to tax the rich even more. And they're going to go after that part of America. Well, that part of America will leave. And as I went over, the US government is entirely financed by their tax receipts, primarily, not entirely, but primarily. It's a very important piece. Those that are actually producing growth and producing wealth and producing value and own the assets that pay the cap gains receipts, it's an important piece of the government further financing this thing. So if you treat those people too poorly, they won't pay you. They won't pay your property tax in California. They won't pay income tax. Zuckerberg and these guys won't build their companies here. They won't pay you the capital gains tax. And so the point is, somebody has to lose. And the point is, who's going to tell the public the truth? Because the point is, there is a hole in the balance sheet. Our domestic debt to GDP is around 130%, meaning there is an excessive amount of debt with no growth to pay it back. So there's a hole, there's a loss. That loss has to be realized. Who's realizing the loss? And the public deserves to know that answer. And if it becomes rich people are expected to realize the loss, I'll get on this podcast and I'll say that. But right now, what authorities are deciding in front of us is the poor average American is expected to realize this loss. That is not arguing against you guys. That is just a fact. And so if you are listening or you have people you care about, tell them to buy Bitcoin, because if you don't have assets, and if especially you don't have Bitcoin, you are expected to realize the loss. Q4 2021, according to Fed data, the top 1% of households in America held around a third of the wealth in the country. The bottom 50%, so around half of America, only has around 2% of the wealth. So that's just the wealth distortion, the wealth gap. It's also important to know that around 95% of the wealth in America is held in assets, and only around 5% of the wealth in America is actually held in cash or cash equivalent. So a savings account, a checkings account, physical cash in your underwear drawer. And so you can tell that half the country is the one holding the actual cash, and the top of the country is the one that has all of the Manhattan real estate and the Miami beachfront real estate and the coastal real estate on California, and owns all of the businesses and the tech stocks and everything, and the hedge funds that own all the Nvidia shares and everything like that. There is one exit door that's accessible to all of us, no matter how much you make, no matter where you are in the world, no matter your ability to store things physically, and it's called Bitcoin. And that's, to me, like the global exit door. But, what gets lost in these presidential debates and in the mainstream media is there is a loss that has to be realized. And nobody is admitting and saying who's expected to realize that loss, right? Because we can all sit here and say get long, get paid, but the reality is who's paying for that? Who's supporting me to get long and get paid? And it's the poor people that are living paycheck to paycheck, or think that they've got 10 grand in a savings account and that's how they should be responsibly saving up for a rainy day fund. It's those people.
According to Jack Mallers, Bitcoin is a unique asset that allows for wider engagement due to its divisibility and accessibility. Meanwhile, Swift's analyst Pav Hundal shares this optimism about Bitcoin, predicting a price recovery to an all-time high of approximately $100,000. However, Hundal suggests a more realistic aim is $75,000 to $80,000 by Christmas, assuming Bitcoin breaks above $70,000. Historical data backs up this optimism, with October traditionally being a great month for Bitcoin, an average historical growth of 23%. Analyst Ali Martinez believes that September's 10% increase could pave the way for more gains, noting Bitcoin's historical record of launching parabolic bull runs in October. Martinez points out that whales' recent buying activity indicates they believe in the market. Veteran analyst Peter Brandt is cautious, pointing out that Bitcoin's recent surge has not changed its trend of lower highs and lower lows. Brandt highlights the need for a close over $71,000, confirmed by a new all-time high, to maintain the rising trend that began in November 2022. Marty Party, a pseudonymous analyst, notes an updated Wyckoff accumulation pattern, implying that breaking over the 71,480 to 66,554 supply zone could propel Bitcoin to around 85,000 in the next stages. This technical analysis supports the bullish sentiment. With several factors working in favor of the bulls, the coming weeks could see substantial advances for the top cryptocurrency. How do you think Bitcoin or other financial tools can help individuals navigate economic uncertainty and protect themselves in these turbulent times? We'd love to hear your thoughts in the comments. Don't forget to like, share, and subscribe for more insights like these. Thanks for tuning in.